Hi, and welcome back to another special edition of Fancy Homes, where we showcase Australia's commercial property market. Perth has captured the attention from investors when it comes to retail assets, with your neighbourhood shopping centre proving to be the most appealing and resilient investment. The pandemic was certainly a pivotal point for landlords, as shopping local was required. The post-pandemic period has shown shopping centres offering superior risk-adjusted returns for investors, and we've seen some notable transactions made across the state. Earlier today, I sat down with Managing Director Nello Magro from Prestige Property International to discuss these emerging trends in the retail sector and its benefit for investors.
The shopping centre buyers are sort of broken up into a series of different categories. You have the syndicators, which are quite prominent in the marketplace today. And the syndicators will take a commercial or retail property asset and then syndicate it and allow smaller investors to invest into something that they wouldn't normally be able to. You then have the private high net worth family offices, which are quite prominent in the marketplace today and quite active. The family offices see, I think, the security that the shopping centres offer in terms of cash flow as something that fits quite well in their portfolio. Another category is probably the developers. The developers are very much focused on the underlying land value of the site and enjoy the income coming from the cash flow whilst they're able to go off and prepare some sort of development approval process or future plans to develop the site.
Last year, your team co-listed the North Beach Shopping Centre. That sold for over $40 million, a record price for the coast. Can you tell us a little bit about that campaign and the buyer profiles?
We ran an Australia-wide campaign between the two agencies. We wrote about 15 expressions of interest between the two agencies, totaling about $500 million of EOIs. The buyer profiles were from quite a few different segments. With that centre, it's 12,000 square metres of land, direct ocean frontage. So the buyer profile was probably slightly stronger than normal towards the developer, where the developer saw potential in developing the site at some point in time and benefit with the cash flow coming off the property in the interim. However, in saying that, there were also syndicators in there and family offices as well. The ultimate buyer was a family office that saw value in the strong cash flow and actually looking to enhance the offering that's currently there, as opposed to being quite active in a development in the short term.
Now, you have listed for sale the Woodlands Shopping Centre, which is certainly a great attraction for locals. Can you tell us a little bit about what this property offers?
Woodlands is around about 8,000 square metres of land, quite a strong catchment surrounded by major arterial roads. It's a centre that has traded very well for many years. Farmer Jack's is the major tenant within the centre and have recently entered into a new 15-year lease and have had their shop expanded and a brand new fit out within the Farmer Jack's tenancy as well. The centre is quite unique because it has a very strong operating medical centre. A medical centre is seen from buyers and investors as a much higher grade tenancy than traditional specialties. And the centre also has the ability to expand. Many of these shopping centre sites are highly sought after because they also allow future development potential under mixed use, incorporating some form of residential apartments, maybe NDIS incorporated on the property.
So what do investors need to look out for when considering an asset like this?
There's quite a few different factors that investors should be studying prior to purchasing an asset like a neighbourhood shopping centre. The underlying land value is very important, and replacement cost is something that a valuer will often take into account when assessing a valuation for the property. A terminology that's referred to as the WALE, or the weighted average length of lease, is very important as well, because the leases are what determines the cash flow that are coming off the property itself, and the length of that cash flow is very important, especially if the investor or buyer is borrowing. Having the right tenancy mix, and a mix that's focused more on essentials as opposed to luxury goods, I think is very important, as the luxury goods sector has struggled a little bit with online purchases. So what we found is there's a strong demand now from investors looking at these neighbourhood centres, because the neighbourhood centres are normally more a service-based offering than, say, a larger regional or sub-regional shopping centre.
And lastly, you and your team won 2 sales awards last year for number and value of commercial listings sold. What are some services Prestige Property International can offer for investors?
We started Prestige back in 2004 and with the property group division, and we were predominantly focused back then on development, project management and asset management services. In 2013, we acquired a small real estate office. We formed what we refer to as a consultancy-based agency. We were able to provide, through our project management, asset management divisions, in addition to our BO, I suppose, where we're able to also incorporate the real estate transaction as well for the customer. We're very focused as a company on supply and demand ratios and all other factors that we've learned through the years of experience that we have in our investment and development divisions, and we can bring that to the table when handling the real estate transaction for the customer.
Well, we look forward to hearing more about your new division next time. Thank you for joining me today, Nello.
Thanks very much for having me.